time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Joe Tegay, portfolio manager of the Rational Equity Armor Fund. Great to see you both. Thank you for being with us. Joe, I know you're going to be hitting the big names that we're following for earnings this week. In the meantime, we have Fed Day. We're getting a lot of jobs info. We've gotten in some earnings. How are you feeling about 2024, at least the first half?
Yeah, so far so good. Off to a great start. Technically looking very good. They say so go January, so goes the year. And I might sound hyperbolic, and we might be saying this on financial news all the time, but this is a really monumental week for the markets. Now, I know we're not really expecting much out of the Fed, but that policy statement is going to be very important because right now the market is 50-50 whether or not there's going to be a cut in March, and that's going to move the markets. I think we're going to have a much more decisive look at whether or not the Fed's going to cut this week. We also have, the jobs data this week. So far, so good on that front with the JOLTS data this morning. And not to mention the huge monumental earnings we have this week. We have 5 of the largest 7 companies in the world reporting this week. It's a big week, to say the least.
Okay, so that being said, first up, I think we have Apple. Tell me about that one.
Yeah, so Apple might look the weakest of this Mag 7 for me right now. It's up against 2 downgrades heading into this earnings. There's some question marks on how strong they are in China. They pulled out of China. They've been putting some restrictions on them. So how strong are they in China? That's been an area of growth within the last decade. Are they still continuing that growth? And are they able to supplement that elsewhere? There is a lot of talk about the watch and that contract dispute or that. But I think that's overblown. I don't think that's going to factor much into this earnings. That said, technically it looks a little weak. I'm worried about the downside post-earnings.
I see. All right. I mean, the trend lines on some of these names have been a little, I guess, intimidating, I'll say, on some of the Mag 7. Rick, why don't you tell us? You're doing the charting on Apple. Your thoughts?
Definitely the weakest of the 3 that we're looking at today. And you can see, you mentioned the trend lines here. We had a downward sloping trend line in blue here that gave way to an upward sloping trend line in white. Notably, we stopped our last advance very shortly above our previous highs that we hit there. So we couldn't quite crack the 200 level. We did carve out some new closing highs though. We also did not make our way that close to those highs during our most recent run upward here. And this stock was looking quite a bit better this morning. We're kind of falling off here quickly. We have fallen below our yellow 21-day exponential moving average. We've tested our orange 63-day exponential moving average. The 21-day EMA has started to shift its slope from upward to downward as well. That's an important sign of potential trend change. The slope of these moving averages kind of can be a warning sign when the trend is starting to roll over here. And we've had, let's see, we're on pace for our 5th red day in a row here in this stock. So we can also see, if we look at our RSI, momentum has been trending down for quite a while here. Today as well, we are slipping below that 50 midline here that separates bullish from bearish momentum. So there's another potentially bearish signal that we're generating here based on our falling price action here. So support, 63-day EMA in orange there, crucial point to hold near 188 as we head into the close. Obviously, resistance is our old highs here near like 199 or so, around 200. That level would be a key area to watch here. Also, this green line, 180, that was the highs that we formed after a gap down here. That was about where we topped out as well, around that point, then bottomed out twice near that point. So that could be another key line to hold to the downside if things really start to fall apart.
Right, understood. Yeah, Jay Woods was talking about, who's often on our air, was talking about a lot of these trend lines because the Magnificent 7 is what everybody loves. They've loved it in 2023, and so the questions they're asking about is 2024, what to do. Tell me your trade here, Joe, final thoughts on Apple.
Yeah, historically after earnings, it's about a 4.3% move. The options are pricing at a 3.2% move. Makes sense for me to buy some protection, use some of that optionality. Really, if I don't even own Apple in my portfolio, I still own it. It's such a huge component of the major indexes. So it makes sense to protect my portfolio, buying some downside protection. I'm just looking at the March 190, 180 put spread. $10 put spread costs $3. A 3-to-1 payout if we close below 180 in March.
Okay, next up, Meta. Your thoughts on Meta?
Yeah, it's just going straight up and it cannot be stopped. It's like the reverse of a falling knife. You know, it's come so far so fast in the falling knife scenario. You assume at some point it's going to stop falling and turn around. Same thing with Meta right here. At some point it's going to stop going up, but it is just so explosive. It's not for me to step in here to say to sell it right here. However, as an owner of Meta, I think it's reasonable to say it's come a long way. If it has a great earnings, I'd be happy to be out of it at this level. I'm going to look to buy right the name here, collect some premium with these higher premiums and earnings, and get a little extra cushion to the downside should there be a adjustment to the expectations for earnings for the rest of the year.
All right. We had Ted Weisberg on, and he was talking about buying Meta on pullbacks. He's had it for so long. Tell me a little bit, Rick, about this chart here.
Well, I mean, I would echo Joe. It's just an absolute beast of a stock to the upside here. Yeah, the opposite of trying to catch a falling knife, maybe trying to pull down a rocket that's blasting off or something like that. It seems like it would be a pretty dangerous short to make right now. Although, you know, you never know. Earnings could disappoint. We could trend downward here. But looking at our chart here, we can see that we've had acceleration of trend. We have these two lines here in green, modestly trending upward that gave way to a steeper purple trend line, then the steepest of all, this white trend line right here. And we've culminated in some new all-time highs today. Not making a lot of net movement since the open, almost a doji type candle that's forming here. There's still plenty of time left in the trading day, though, so I wouldn't go jumping to conclusions about that just yet here. RSI, our measure of momentum, reflecting this acceleration of trend. We can see we had a blue trend line that gave way to a steeper green trend line. RSI about 80 right now. Remember, RSI only goes from 0 to 100, so a reading of 80 is quite elevated here, suggesting further bullishness here. The bearish signal would be when the RSI crosses below that 70 threshold that separates the normal activity from the overbought activity. That would be a potential warning sign here. So, you know, really not much for the bulls to complain about in this chart. If we do keep moving upward, +1 standard deviation channel, that's based on our linear regression line, our line of best fit. +1 standard deviation up from that comes in near 436. That could be a potential resistance point if things keep cruising to the upside as they've done. If we move to the downside, right here catches my eye. The intersection of our linear regression line and our 21-day exponential moving average right around 376 or so. So we have a nice confluence there for some potential support.
Okay. You know, as we go, thank you for that, Rick. As we go into these earnings, Joe, how do you know, make your trades? How do you set up? Is it before or after the earnings and such? Tell me a little bit about that, because we're waiting on the numbers, right, this week.
Yeah, and as a portfolio manager, it's an opportune time to just reevaluate my holdings. Do I like what I have? Am I taking too much risk into earnings for a name like Meta, where we usually get big moves on earnings? It really makes a lot of sense to use that to our advantage by selling some premium into that event. And again, if it's a stock that I'm not loving so much and I'm not thrilled with the volatility potential, it might be a time to get out of the name or add some protection due to, we know these earning events can be a huge make or break moment for stocks.
I see. All right. But here, as you said, okay. So last but not least, what about Amazon?
Yeah, Amazon, I'm thinking the opposite here into Amazon. No, I think, you know, tremendous GDP number last quarter. I think that'll benefit Amazon. Yes, they've had enormous growth in cloud over the last few years, and I see no sign of that slowing down. But their core business, their retail business, that should be rocking and rolling right now. And I see no reason why this stock cannot push to all-time highs.
Oh, all right. There has been a lot of talk that Amazon looks like a good value play out of the group. Rick, your thoughts on the chart?
Yeah, this chart's in the middle of the pack of the three names we're looking at today, but still an extraordinary performer during the past year here. Still a little bit short of those all-time highs. Yes, I believe they were around 188 or so. But once again, acceleration of trend. falling wedge type shape here with our two blue lines converging toward each other gave way after, excuse me, an upside breakout to a purple channel trending upward. In the short term, we've got an even steeper white trend line going upward there. You can see as well, volume profile reveals heavy trading around that 154, 155 level. So that was about where we topped out a few times here. So there was some conviction at these elevated levels. We pushed above that point. Now we're, just making our way upward once again here. The price action slowing down a little bit today. On pace for a Harami candle in which the distance between the open and the close, also known as the real body of the candle, completely contained within the previous day's open to close. And it's the opposite color. So we have a red candle and a green candle yesterday. So once again, still plenty of time left in the trading day, but that would be suggestive of a small pause in this trend here. Not really uncommon heading into earnings. RSI, very curious on this name here. If you look at this red line, you can see that typically we don't make much progress around the 66 level on the RSI. Notably, we have made our way above that point here, but we're falling off a little bit now with today's somewhat slower, more sluggish price action here. Trend line still in play. Support line, I guess you could call it, around 66 still in play here. Look to see if we can push above into that overbought area once again here. In terms of resistance, 165 would be our channel, and I just did that by making a standard trend line, then duplicating it, putting it across the highs. You can use this to gauge potential resistance. +1 channel, standard deviation channel, comes in near 175. Quite a bit of support here, just below near that 154, 155 area. Linear regression line, 21-day exponential moving average, old highs, volume node. Take your pick. There's a lot in that same area to potentially prop up prices.
Right. A lot of circles, and most of them are showing some upward potential, to your point. Joe, final thoughts here on your trade for Amazon.
Yeah, I'm looking forward to test that upward bound of the resistance. Looking at the Feb 165, 185 call spread, all-time highs 188. I think we're going to be close to that. I'm really shooting for the moon on this one.
All right, thank you so much. Great to see you both for the big three today. We had Apple, Meta, Amazon, Joe Tigay, Rick Ducat. Thank you both very much.